Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Cynthia Kett. Cynthia is a principal at the advice-only financial planning firm Stewart & Kett. Cynthia, let's talk about investing for high net worth individuals. How big a portfolio do I need to have to be considered high net worth by the financial industry?
One of the benchmarks might be about $1 million, although there are firms who have a higher minimum and others who have a lower minimum.
Now, if I'm in that category and I have a portfolio put together for me, how different would it look from the kind of portfolio a smaller investor would have?
There's three things that might distinguish it. One is that overall, as a percentage of assets, they have lower fees. They might have a broader range of investments, and three, it would be customized. And so with respect to costs, many investing firms will have a tiered fee schedule. So
give me an idea of where the fees might, like a range, a percentage, and then maybe you could give us a dollar, how much that would translate to in dollar terms on, let's say, a $1 million portfolio.
Well, let's say if you were to invest through mutual funds, and the average mutual fund might have a management expense ratio built into the cost of the portfolio of, say, 2.5%. Someone with a $1 million portfolio might be looking at a management fee of about maybe 1.5%, or maybe even a little less, 1.5%. And as you go up the scale, if you get to, say, 3 million, the next 2 million might be at 1%, and after that it might go to 0.75%.
Okay, so you can get well under 1% as your portfolio grows.
Absolutely.
Now, in terms of managing money for high net worth individuals, you often hear the term portfolio managers and investment counselors used. What are those terms, and where do they fit in?
An investment counselor is somebody that you work with to make investment decisions about your portfolio. You are not giving them discretionary control over your portfolio. Any trade, any buy or sell that happens in your portfolio, they have to have approved by you. So you're sharing the responsibility for the management and performance of the portfolio.
How does that differ from a traditional, your basic advisor who you could find at any number of firms?
That's what you would consider an investment counselor. A portfolio manager is where you're giving them discretionary control of your account. So essentially what you do is you explain what the parameters for your account are and what the restrictions are, and you're saying, here, take my money, I'm trusting it to you.
Make all the decisions for me.
Exactly.
Okay, thanks, Cynthia.
You're welcome.